Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 18th of August. I'm Stephen Carroll in London. Coming up today, Ukraine's President Volodymyr Zelenskiy arrives in Washington for crunch talks with President Trump, joined by the UK's Keir Starmer and other European leaders. The median pay for FTSE 100 CEOs reaches £4.6 million, but that still pales in comparison to what their American counterparts earn. Plus, credit where it's due. We take a closer look at Apollo's fiendishly complicated fund that's finding creative ways to put insurance capital to work. Let's start with a roundup of our top stories. Ukraine's President Volodymyr Zelenskiy has arrived in Washington ahead of meetings with President Trump and European leaders. The summit's being attended by top officials including the UK's Keir Starmer, Germany's Friedrich Merz and France's Emmanuel Macron. Here's what he's hoping to achieve at the meeting.
To strategize how to keep the pressure agenda alive in case President Putin doesn't come to the trilateral meeting or the quadrilateral meeting, and how we strategize on the next steps.
As French President Emmanuel Macron, President Trump is expected to outline terms for a potential peace deal discussed with Vladimir Putin, with Washington likely to focus on territorial concessions demanded by Russia. The meeting follows a weekend phone call among allies, during which Donald Trump is said to have told leaders he's open to US involvement in providing security guarantees for Ukraine. Here's what Trump's special envoy Steve Witkoff told CNN's State of the Union programme on Sunday.
We got to an agreement that the United States and other European nations could effectively offer Article 5-like language to cover a security guarantee.
Witkoff there referring to NATO's Article 5, the alliance's mutual defence clause requiring member states to respond if any one of them is attacked. More than 3 months after the US and the UK agreed the first of a string of deals to reduce tariffs, many trading partners are still waiting for the rhetoric to become reality. Britain, Japan, South Korea and the EU all say the White House has promised them exemptions in trade talks, but hasn't yet signed them into law. Bloomberg's James Woolcock has more.
For the Brits, it's steel. Take a listen to Prime Minister Keir Starmer 3 months ago.
Just a few moments ago, I spoke to President Trump, the President of the United States, and I'm really pleased to announce that we've agreed the basis of a historic economic prosperity deal. It will remove tariffs on British steel and aluminium, reducing them to zero.
The UK Prime Minister was very clear, and no one in the US corrected him, but the steel exemption has never been finalised. So the current tariff on UK steel exported to America is 25%. For Japan, South Korea and the European Union, it's the exact same problem, but with cars. Fears are growing. The scale of the US's global trade talks are making delays inevitable and likely causing more economic damage. In London, James Woolcock, Bloomberg Radio.
Israel's economy slumped in the second quarter as the country's 12-day war with Iran forced a shutdown of many businesses. GDP fell by 3.5% in annualised, seasonally adjusted terms. The worse-than-expected data came as hundreds of thousands of Israelis took to the streets to protest Prime Minister Benjamin Netanyahu's plan to expand operations in the Gaza Strip. Organisers said as many as 500,000 people attended the rally in Tel Aviv. Netanyahu, however, insists that calls to end the conflict will only embolden Hamas.
Those who are calling for an end to the war today without defeating Hamas are not only hardening Hamas's stance and delaying the release of our hostages, they are also ensuring that the horrors of October the 7th will recur again and again.
That was Israeli Prime Minister Benjamin Netanyahu speaking through a translator. Annual pay for bosses of FTSE 100 companies has hit a record high for the third year in a row. With more, here's Bloomberg's Chris Pitt.
Median pay for CEOs at the 100 biggest companies traded on the London Stock Exchange reached £4.6 million in the last financial year. That's equivalent to around $6.2 million. According to the research from the left-leaning think tank, the High Pay Centre, average salaries for top bosses rose by 7% across the year. Still, the figures fall far short of CEO compensation in the United States. Data for median pay at selected S&P 500 companies shows compensation there has reached $16.8 million. And some argue that this pay gap is one reason British companies have been moving their listings to New York. In London, Chris Pitt, Bloomberg Radio.
Airbus's A320 series is about to overtake the Boeing 737 as the most delivered commercial aeroplane in history. Aviation consultancy firm Cirium says the jet is just 20 sales short of the record. The 4-decade race between the two firms charts both Airbus's rise and also the lack of new plane designs in aviation. And those are our top stories this morning. A check on the markets for you. The MSCI Asia Pacific Index up by 0.5%. The Nikkei in Tokyo is 1% higher this morning. The MSCI China Index 1.3% higher. Euro Stoxx 50 futures are up by 0.2%. We're watching oil prices holding steady. Brent crude at $65.87 ahead of that crucial Zelensky-Trump meeting coming up a little bit later. The 10-year Treasury yield down a basis point in trading today after the big moves we saw on Friday. 4.3% is where that's starting the week. We're looking at the Bloomberg Dollar Spot Index, a 1% weaker. The euro's at 117 against the dollar. In a moment, we'll bring you more on what to expect from Ukrainian President's White House meeting, plus how private capital giant Apollo and finance firm ACS have devised a fiendishly complicated fund that's finding creative ways to put insurance capital to work. But first, another story that I've been reading this morning about from what may have been the major sporting event of the weekend, depending on your point of view, the World Humanoid Robot Games. So the event in Beijing sees robots taking part in things like races, football matches, boxing matches, and while it's very impressive to see the progress being made in this area, it's also quite funny to see these robots falling over each other, essentially playing football with no skill whatsoever, something I can identify with, and in some cases losing robotic limbs while taking part in these events as well. Now, Nvidia's Jensen Huang has talked about robotics having the potential to grow into a multi-trillion-dollar industry. Elon Musk sees Tesla's Optimus having the potential to generate $10 trillion in revenue, but it does look like we might be some distance from those massive gains as well. In fact, one of the leading companies at these games in China, Unitree, the CEO said earlier this month that in terms of development, it feels like a point of 2 to 3 years before ChatGPT, to put it on a comparison to large language models. But for now, it is funny to watch and to marvel at, a key sector as the technology develops. You can read our reporting from the World Humanoid Robot Games on Bloomberg.com and on the terminal. We'll put a link to the story in our podcast show notes as well. Let's bring you more now on the Ukrainian president's meeting with Donald Trump later and after the Alaska summit with Russia's Vladimir Putin. Our chief Asia correspondent Rosalind Matheson is with me now for more. Ros, good morning. Now, President Zelenskyy's last Oval Office meeting with Donald Trump was bruising. What is Vladimir Zelensky hoping to achieve today?
Well, at the outset, I imagine he's trying to avoid a repeat of that February meeting, of course. And the risk is not insignificant there, given that Donald Trump is really pushing heavily to get not just a ceasefire, it seems, but a full peace deal, and to do so quickly. And as part of that, suggesting that Ukraine really needs to be prepared to cede territory. So it's to manage that meeting is probably the most overarching objective, and to keep Donald Trump very focused on what this also means for Ukraine, and to keep Ukraine's interests in mind. I mean, he'll want to understand even more what exactly was said between the leaders of US and Russia in that meeting. He'll want to understand what Donald Trump is thinking about land and territory. He'll really want to understand what Donald Trump is thinking when these references that we're now hearing to potential security guarantees for Ukraine. What does that actually mean in practice, and what would that look like? And so the questions are over what exactly that would entail, and to understand Donald Trump's timeline, and to remind him that racing to get a peace deal would probably not be necessarily in Ukraine's interest when it comes to things, again, like land. But Donald Trump seems very intent on getting the leaders of Russia and Ukraine in the room sooner rather than later. And perhaps Volodymyr Zelenskiy wants to encourage Donald Trump to tap the brakes very slightly on that, to get a clearer sense of the road in a way before they all sit down.
Vladimir Zelensky is not coming alone to this meeting as well. He's being accompanied by a whole range of European leaders, including Ursula von der Leyen and Keir Starmer. I mean, what's the effect that those leaders are hoping to have on the president by coming along?
Well, in a way, they'll all be fanned out, perhaps a bit like a shield for Volodymyr Zelenskiy again to avoid that conversation going off the rails that we saw earlier in the year, but also very much to send the message that they're standing with Ukraine on this and they're standing with the Ukrainian leader in his interests in these conversations, and to endorse the view again that you can't rush into something where you see Ukraine being pressed to cede territory, Russia making fairly minimal concessions potentially on land, and a lack of clarity about these security guarantees. And also to again say the role of Europe needs to be heard in all of this, and perhaps there is a role for Europe in post-war security for Ukraine. And so it's about helping manage that conversation and again steer it in the direction that they want, which is above all to support Ukraine.
So many of our conversations around these series of meetings about who's not in the room. Now, Vladimir Putin is not at this version of this composition of a meeting. What has changed since the Trump-Putin summit? We only have a limited idea of what was discussed at that meeting.
Well, that's right. And we seem to have leapfrogged from the idea of a ceasefire into let's get a full peace deal and do it very quickly. I mean, Donald Trump said he was going into that meeting with Vladimir Putin to come out with a ceasefire. And now he says, actually, we don't need that anyway. Let's just get a full peace deal. And we've got the parameters of it already. So that seems to have shifted the territory very much in the conversation and put Ukraine under a lot of pressure very quickly. And so that's certainly the backdrop again to which these conversations are happening today. And the challenge in all of this is not just for Zelensky, but also for the European leaders to stay united. I mean, it's a pretty big gaggle of them going. Some of them have very good relationships with the US president, particularly the NATO Secretary General and the Finnish president, but they don't always all agree on the path forward for Ukraine. And so, understanding exactly where Donald Trump's mind is probably the number one priority here.
In terms of what could emerge from this and how European leaders might be hoping for a win in this, what does a win look like for those who've travelled to Washington today?
Well, a win is probably just the feeling that Donald Trump's heard what they've come to say and is taking that on board when he thinks about the next steps in all of this. I mean, it's clear he now wants to move towards a full peace deal. And, his words even to Volodymyr Zelenskiy overnight were, you can make this happen pretty quick if you want. So he seems to be putting the pressure back on Ukraine. So a win for Europe is to have Donald Trump really aware of what this means for Ukraine. Constitution or able to give up territory, freezing a war in place. What does that mean? What's the future of Ukraine in all of this? So that's probably the number one priority, is to slightly reset the table a bit with Donald Trump and have him really factor in the Ukrainian part of it after his meeting with Putin a few days ago.
Okay. Rosalind Matheson, our Chief Asia correspondent, thank you very much for joining us to look ahead to that meeting taking place in Washington later. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now, in recent years, Apollo and other peers with private equity roots have been buying up swathes of the life assurance and annuity industry, getting their hands on a mountain of savings. But there's a snag. Using this cash for riskier, more lucrative bets on private credit and similar assets often inflicts hefty capital charges on insurers. So Apollo has created a complex investment vehicle to solve that dilemma. And our senior private credit reporter, Silas Brown, joins me now to explain. Silas, good morning. What is the goal behind Fox Hedge?
Well, firstly, it's an intriguing name, isn't it? But I think the goal, in essence, is insurance companies have a series of needs when they're deploying capital. One of them is to try to match assets with liabilities. So they have, long-term liabilities with their insurance contracts, and it's very, very hard to find debt with equivalent maturities. And so Fox Hedge, which has a final maturity of 40 years, solves that problem. I mean, it's quite a rarity, actually, to find corporate debt with such lengthy maturities. But also, given it's rated AA and houses a series of different asset classes, including direct lending, CLOs, a whole sort of smorgasbord of different assets that Apollo is active in, with its highest rating at AA minus, it also means that they can get exposure to a series of asset classes without inflicting hefty capital charges, as you say, to access them. So they can kind of benefit from the boom of private credit without having, without sort of suffering the capital charges that come alongside with investing in these sort of more lower rated asset classes.
Okay, so it's sort of a workaround for these insurers, but talk us a little bit about the mechanics of this. How does it work?
This is very, very challenging. But basically, what Apollo has done, along with this small business called Advanced Credit Solutions, which actually came up with the idea, is they've set up an SPV in Bermuda, and the SPV is backed by Apollo-originated assets from anything from CLOs, direct loans, to real estate, to investment grade assets, and the SPV then sells corporate debt, and the corporate debt has, I think, a sort of average weighted maturity of about 30 years, but the final maturity is 40 years. And they sell the debt, and the debt is then sold to Athene, the insurance company that Apollo owns, as well as a number of other insurers. I mean, there's more kind of complicated within that mechanism. There's more complicated processes, but I mean that's the essence of it.
Okay, I'm furiously drawing a spider diagram as I'm talking to you, Silas, to try and understand this, but I think I've got the outline of a special purpose vehicle, but essentially the complexity is sort of what's unique about this particular move. But is it a risky move for these insurers? What's the sort of risk involved?
Yeah, so I think the Fox Hedge is an interesting illustration of a phenomena that's been occurring for a few years, which is that private capital firms are buying up insurance companies and using that insurer capital to invest in different alternative markets. Fox Hedge is we think quite a unique fund, but will I assume be copied, and I think there will be similar funds from a number of different private capital firms and other players on Wall Street. I think that's one of the risks. I think one of the risks is that that we've heard from quite a few people is it's not that Apollo's a clever, full of clever people that kind of understand the dynamics of when dealing with illiquid investments. It's more that other people may copy, and if something's done in a more slapdash way, you can find real dangers when you're investing kind of long-term investments in illiquid and very complicated asset classes and structures. And so I think that seems to me our chief risk, that this is very new ground, and billions of dollars are being put to work by private capital firms on behalf of insurance companies, and it only takes one poorly structured investment, I think, for regulators to clamp down on kind of burgeoning industries such as these.
And have we heard anything from regulators about this?
They have not spoken about Fox Hedge directly, as far as we know. I mean, I think a number of regulators, both in the US and Europe, are engaged with the broader concept that I outlined earlier. Because I think it is. From a private credit perspective, I think it is. The idea of private capital increasingly managing more and more insurance money, I think, is one of two big phenomena that are occurring in private credit, the other being an increasing push into retail. And both of those concepts, I think, regulators are very interested in. I think the idea from a regulatory perspective on insurer money is to do with capital charges as well. They have rules that if you invest in sort of sub-investment grade assets, sort of riskier loans, then you have to pay capital charges. You have to pay higher charges against it than what you would if you invested in investment grade assets. And these kind of structures, because they're structured in a way that does create a degree of safety for the investors, they can achieve investment grade ratings through constituent parts, some of which are sub-investment grade. Forgive me if this is too complicated, but I think that's kind of, I think this arbitraging the capital charges, I think, is something that regulators are very engaged with.
Okay, Silas, we appreciate you taking us on this journey through a very complex but really interesting development in the financial plumbing, I suppose, in private credit. Silas Brown, our senior private credit reporter, thank you very much. Well, the time is 6:22 here in London. Let's bring you up to speed on what's moving on markets this morning. So we've got Asian shares rising 0.4% now in the MSCI Asia Pacific Index, led by gains in China and Japan. So the Nikkei in Tokyo is up by 0.9%. The Hang Seng Index is up by 0.5%. The MSCI China Index 1% higher. South Korea actually lagging this morning, down by 1.3% in trading. In fact, a gauge of Shanghai listed stocks is set for its highest close in a decade. Ahead of that meeting between Donald Trump and Vladimir Zelenskiy later, we have got oil prices holding pretty steady. Brent crude's up just 0.1%, $65.89. We'll be watching, though, what's going on with European yields later on, because we had that big jump in yields, particularly at the long end of the curve on Friday. 10 basis points higher for the 10 and 30-year French yields. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.